Okay, let's unpack this. Today, we're diving into a network that's really undergone a seismic shift, Bittensor. Specifically, we're looking at the landscape after its massive Dynamic TAO, or DTAO, upgrade back in early 2025. We've got a whole stack of material here. I mean, everything from the really deep technical docs and financial reports, all the way to community debates simmering on Reddit and some pretty pointed critical analyses floating around.
Yeah, and this wasn't just a minor update. It fundamentally re-architected the whole thing.
Exactly. Changed the core economic engine, the governance.
Yeah.
Moving from something, well, pretty validator-centric.
Right, to this free market mechanism.
Right.
Driven entirely by TAO holders staking their tokens. It was, like you said, a genuine paradigm shift.
And what's really fascinating, I think, is how a technical change like that just completely reshapes the human layer. Who's got influence, how value is seen and captured, the strategies people need just to survive.
Absolutely. It changes the whole game.
So our mission for this deep dive, using all these sources, is to try and cut through that noise. We want to pinpoint the key players in this new world, understand the new power dynamics.
Dissect their strategies, their reputation.
Yeah, and figure out what this huge transformation actually implies for Bittensor's future. Think of this as your shortcut, your essential guide to getting a handle on this really complex, fast-moving corner of decentralized AI.
We'll walk you through how DTAO works, look at both the, let's say, the ambitious vision and the sharp critiques. And we'll introduce you to the main forces at play. The validators, their new role, the subnet builders doing the innovating, the capital allocators who've become super influential, and, the voices shaping the story on the ground.
All right, let's jump right in. The core engine of this new world, the post-dTAO economic paradigm. How did this technical change actually, rewire the network's incentives?
Okay, so at its heart, DTAO, which went live February 2025, was about decentralizing how the network decides which AI intelligence gets rewarded. Before DTAO, you had this central root subnet, basically a limited group of validators making those calls. And many people saw that as a bottleneck.
Right, a bottleneck and maybe a source of conflict of interest, too.
Definitely. So you had these gatekeepers kind of deciding who got the rewards, the gravy, as you put it.
And DTAO essentially just said, no more.
Pretty much. It turned each subnet, and there are over 100 now, into its own little microeconomy, each one with its own unique tradable token.
Okay, and that's where the alpha tokens come in, right, and the AMMs?
Exactly. This is where the mechanism gets, well, either clever or complicated, depending on how you look at it. It introduced alpha tokens, the symbol is R, and an automated market maker, an AMM, for every single subnet.
So instead of trying to convince those root validators.
Right. Users and investors now stake their main network token, TAO, that's a TOR, directly into a specific subnet's AMM. And doing that gets them that subnet's alpha token.
And this staking isn't just like locking up tokens. It's an economic vote, right, on chain. It says, I believe this subnet has value.
Precisely. That staking becomes the primary signal of value and demand. And that signal, crucially, translates directly into TAO emissions, the network's rewards.
How does that translation work?
It's based on the price of a subnet's alpha token. That price is determined purely by the ratio of TAO to alpha in its AMM pool. So if a subnet's pool represents, say, 10% of the total market value across all the subnet alpha tokens out there.
It gets 10% of the block rewards, somebody said.
Market-driven emissions, exactly. And then within that subnet, those emissions get distributed according to a set formula. 41% to the miners doing the work, 41% to the validators and stakers securing that specific subnet, and 18% to the subnet owners, the team who built and maintain it.
The idea being, I guess, a truly market-aligned incentive system.
That was the goal.
Okay, so what was the dream scenario? The bright bull case for how this whole thing was supposed to play out?
The intended vision was this, well, beautiful flywheel effect.
Yeah.
Imagine a subnet builds something genuinely useful, a great AI model, cheaper compute, whatever. It starts attracting TAO stake from users, investors.
Which drives up its alpha token price in the AMM.
Exactly. Higher alpha price means that subnet captures a bigger slice of the network's TAO emissions.
More emissions mean more rewards.
Which attracts better miners, better validators, improving the service further.
And a better service attracts even more stake. And the cycle just reinforces itself. Vroom.
That's the flywheel. And this was explicitly designed to fix those pre-DPAO problems, breaking that validator bottleneck, getting rid of the incentive for validators to just pump their own bags, their own subnets.
The goal being a faster, more meritocratic, truly decentralized incubator for AI projects. Sounds good on paper.
That was definitely the hope, the narrative. But almost immediately, a really powerful counter-narrative emerged. a potent bear case.
Ah,
And this view frames DTAO quite differently, not as liberation, but as a system that might be primarily engineered for, well, extraction, potentially benefiting the early large holders and the existing validators by creating new ways for them to get liquidity.
this is where that three platters theory comes in, isn't it? Sounds critical.
Oh, it's definitely critical. It's a sharp analysis. The core idea is that DTAO introduced dynamics that, according to this theory, resemble a Ponzi-like structure.
A Ponzi, how so?
The argument is it's aimed at attracting fresh capital, mainly so early players can potentially exit their positions into that new demand. The split platter part refers to the explosion of all these new subnet tokens, the theory goes. The allure of potentially crazy ROI from these new, unproven alpha tokens attracts speculative money from newer entrants.
And to get those alpha tokens, you have to stake TAO into the AM.
Exactly, which creates this mandatory TAO buying pressure. And the critique argues that allows the OGs, the validators holding lots of TAO already, to sell their holdings into this engineered demand.
So it sounds like the accusation is building a fancy mechanism just to create exit liquidity for insiders.
That's the core of the extraction critique, yes. And it also points to what it sees as seriously misaligned incentives.
How are they misaligned?
Well, think about the subnet owners, the people actually building the AI service. This critique says they end up basically working for the validation nodes and the miners, because the alpha tokens themselves, they don't have much utility beyond generating more alpha tokens or getting those TAO emissions eventually. So the subnet owner, trying to build a real business, often has to find off-chain revenue, maybe from actual customers, just to buy back their own alpha tokens. Why? To support the price against the constant sell pressure from validators and miners who are just cashing out their emission rewards.
So the builders bear the cost and risk, while others just extract value?
That's the argument. The owners bear the cost, the risk, the development burden, while the financial players, the validators, extract the value flow.
And what about the mutual aid platter failure part of that theory?
That points to the lack of good infrastructure for capital and value to flow between different subnets easily. In a lot of other crypto ecosystems, liquidity moves around pretty fluidly. But in Bittensor, you suddenly had 100-plus distinct AMMs, 100-plus tokens.
Yeah, that sounds fragmented.
Exactly. That rapid proliferation, plus some infrastructure hurdles, led to liquidity getting really diluted and fragmented across the whole network. It's hard for value to concentrate or move efficiently.
And the evidence cited for this extraction theory?
The proponents often point to on-chain data analysis allegedly showing a significant net flow of TAO out of the root network, especially after DTAO went live, suggesting capital wasn't just staying and compounding within the ecosystem.
Okay, wow. That's a really stark contrast to the flywheel bull case.
Mm-hmm.
So, stepping back from the pure theory, what does the actual reality on the ground look like today, post-dTAO?
Well, it's messy. It's definitely not a perfect version of either extreme.
Yeah.
What DTAO absolutely did do was replace one power structure with another. It shifted the game.
From political to financial.
Precisely. It went from what was largely a political game, schmoozing a small council of root validators, to fundamentally a financial game. Now, influence and success hinge on your ability to attract and deploy capital effectively within these new market rules.
And that shift is really the critical lens we need to use.
It's the lens. The system is permissionless, it's dynamic, absolutely. But it's also inherently volatile and, as the critics argue, potentially prone to predatory dynamics. Because any market system tends to favor those who already have capital and, frankly, are savvy about playing the market game.
So it sounds like the core tension now is between teams genuinely trying to build useful AI products
and teams who might just be really, really good at playing the financial and narrative game that the DTO mechanics enable.
That's the central conflict playing out on chain, isn't it?
It really is. Success now seems to require one of two things. Either you build something with such compelling organic utility that it just naturally attracts stake and users, regardless of hype, or you become a master of the financial game. You attract speculative capital, you nail the narrative, you drive your alpha token price up, and that's how you capture emissions and survive.
And the reputation of basically everyone involved, validators, subnet owners, investors, is increasingly judged by which path they seem to be on.
Exactly. Are they seen as builders or extractors? That's becoming the key reputational dividing line.
And maybe nowhere is this transformation clearer than with the validators themselves. Their whole role just got flipped upside down.
Completely. They went from being these undisputed gatekeepers, the ones deciding who got rewarded,
to something much more like, decentralized venture capitalists strategic capital allocators.
That's a great way to put it. Yeah, decentralized VCs. Their success now is tied directly to their ability to spot promising subnets in the market, back them by staking TAO, and support them. It's not just about running servers and voting anymore.
And this new role presents them with a really clear strategic choice, doesn't it? A fork in the road for their capital.
It absolutely does.
Yeah.
They have to decide where to put their TAO, whether it's their own stash or capital delegated to them. Option 1, be conservative. Stake into the root subnet, subnet 0.
Which gives them a share of network-wide emissions regardless of how individual subnets do, like an index fund.
Exactly. Lower risk, broad exposure, like a Bittensor emissions index. Option 2, go aggressive. Stake directly into the AMM of specific mining subnets they believe in.
Buying their alpha tokens, making a direct economic bet on that project's success in the market.
Precisely. High risk, potentially high reward alpha hunting.
And this has naturally led to a new hierarchy, right? Certain players racking up huge amounts of stake and influence based on their choices and capital.
For sure. You still have the Open Tensor Foundation, the OTF. Yeah. They still hold significant sway because, well, they lead protocol development and hold a lot of TAO. That's always been a bit of a tension point regarding decentralization goals.
But then you see these newer kinds of influential players cropping up, like TAO Stats and Corcel.
Right. They're fascinating because they didn't necessarily start as big validators. They built essential public goods first, the main network explorer people use, critical API access for developers.
So they built trust through infrastructure.
Exactly. That work gave them a powerful reputation for transparency and technical contribution. And that reputation attracted a lot of delegated stake, making them major players in the validator game now.
And then, of course, there are the institutional heavyweights, the big three, as some call them.
Yeah, these are the deeply capitalized entities wielding immense influence.
Yuma comes to mind immediately. DCG's dedicated Bittensor subsidiary launched late 2024.
Their approach is incredibly aggressive and vertically integrated.
What do you mean by vertically integrated?
They're not just running a validator node. They're also investing directly in subnet teams. They're building their own projects, and they're actively incubating others. Think Sturdy, Masa, Score, SN10, SN42, SN44. They partnered with them.
Wow, so they play across the whole stack.
Right. And they shot up the ranks, became the third largest validator by delegated stake incredibly quickly.
And that partnership with BitGo in June 2025, that felt like a big deal.
Huge. It positions Yuma as arguably the primary regulated gateway for large-scale institutional capital wanting to get into Bittensor staking.
So their reputation is professional, strategic, powerful.
All of the above.
Yeah.
But their sheer size and integration naturally fuels those ongoing centralization concerns, within a network theoretically built on decentralized ideals.
And you've also got players like DAO5 and Polychain Capital. They were in early, high-conviction crypto VCs.
Very early. Holding positions reportedly worth hundreds of millions now. And crucially, they aren't passive investors. They're active infrastructure participants. Both run their own large validator nodes. DAO5 is called TAO5, for instance.
So they have real skin in the game operationally.
Deep commitment. Tekin Salimi, a founder of DAO5, has been very public, calling TAO one of their highest conviction positions, viewing it as a long-term play.
Beyond these giants, though, there's that layer of community validators, niche players.
Absolutely vital layer.
Yeah.
Names like Datura, Roundtable 21. You see them mentioned constantly in community chats, on Reddit, particularly as trusted choices for smaller retail delegators.
How do they compete with the big guys?
They build their reputation differently.
Yeah.
Not on sheer capital, but on operational excellence, high uptime, reliability, transparency with their delegators about fees and performance, and genuine community engagement. They represent that independent operator ethos.
And that's where you see the real nitty-gritty discussions happening among delegators, right? Comparing APY, the commission rate, the take.
Yeah, the take defaults at 18%, but validators compete by lowering it sometimes, and people dig into the on-chain performance metrics.
Like vTrust. What's that?
vTrust is a score from 0 to 1, measuring how well a validator's scoring of miners aligns with the overall network consensus. Higher is better.
And dividends.
That shows their actual share of emissions earned. It's a function of both their vTrust and the total amount of stake they have. High stake, but low vTrust means fewer rewards get distributed.
Tools like TAO Stats let anyone track this stuff.
Yep. Detailed dashboards for monitoring performance, even per subnet sometimes. Delegators are getting pretty sophisticated.
So even with this new DTAO system, that old debate about validator conflict of interest, It hasn't exactly disappeared, has it?
Not at all. It's just transformed.
How so?
The old critique was validators might unfairly favor their own subnets when deciding who gets emissions in the old system. Now, the issue is different. Large validators, especially the institutionally backed ones like Yuma, can use their massive stake, potentially hundreds of millions of dollars worth, to provide the initial liquidity and a huge demand signal for the alpha tokens of the subnets they've incubated or partnered with.
Creating a self-reinforcing loop that benefits their own ecosystem.
Exactly. It gives them a powerful advantage in bootstrapping their chosen projects within the DTAO market. So the criticism persists, just in a new form, that the largest validators still function as a kind of privileged class with an outsized ability to shape market outcomes and extract value via emissions.
It sounds like it's forcing validators to really evolve. Just running a node isn't cutting it anymore.
Definitely not. The competitive pressure is immense. The successful validators are becoming much more than just node operators. They're turning into comprehensive platforms.
Like Yuma with its incubation and institutional onboarding.
Or Taostats and Corcel becoming essential data and API providers for the whole ecosystem.
So you need a strong brand now. A unique value prop.
Absolutely. You need that to attract and, just as importantly, retain delegated stake in this market. It's professionalized the role incredibly fast.
Right.
Validators now need to be entrepreneurs, developers, marketers, the whole package.
Leading to what feels like a kind of two-tier system emerging among validators.
I think that's fair to say. You've got the large institutional tier, Yuma, DAO 5, Polychain. They leverage huge capital, strategic partnerships, economies of scale. They offer perhaps a perceived layer of security, alignment with traditional finance, maybe more like an index play for delegators.
And the second tier.
That's the independent, community-focused tier. Think Datara, Roundtable 21. They build their brand on trust, transparency, direct community alignment. They often compete by offering lower commission rates, aiming for higher net returns for the retail delegators who value that ethos.
So, as a potential staker, you really have two distinct investment theses to choose from when picking a validator.
Pretty much. Do you want alignment with institutional power, potentially perceived as safer, more index-like? Or do you prefer the community-driven approach, maybe higher risk-reward, more aligned with the decentralization spirit, potentially better net returns if they perform well?
You can see these differences reflected in the data too, right? Like in the tables from CoinGecko or Taostats showing total stake, commission rates, performance.
Yeah, the data qualitatively backs up these different models and strategies.
Okay, let's shift gears. Moving from the infrastructure and capital layer, let's talk about the production layer, the subnets themselves. These are meant to be the heart of the network, right? Where the actual AI intelligence and utility gets created.
Correct. They are, in theory, the decentralized marketplaces for all sorts of digital intelligence. And post-dTAO, their path to success is, well, brutally simple in concept.
Attract, stake, or die.
Essentially, yes.
Yeah.
Attract stake in the open market via your AMM, or you wait away. No more needing approval from root validators, but you absolutely need the market's economic vote, expressed through stake TAO.
And this permissionless approach, combined with the new incentives, it led to what people are calling a Cambrian explosion of subnets.
Absolutely. The growth was just exponential and, frankly, chaotic.
How fast was it?
We saw the number of active subnets jump from around 65 to 95 in just the first few months of 2025. By June 2025, there were well over 100 live subnets.
And the value locked in them.
The total market value of all the subnet alpha tokens combined reportedly crossed $500 million by late April. Huge influx of capital and activity.
Okay, that sounds exciting, but rapid permissionless growth like that must come with some serious headaches.
Oh, massive challenges. First, there's redundancy. You get multiple subnets all trying to do basically the same thing, splitting focus and liquidity.
And probably a lot of projects that aren't quite ready for prime time.
That's putting it mildly. A proliferation of projects that, frankly, lack clear real-world use cases or haven't found product-market fit. They're just chasing emissions.
And for anyone trying to navigate this user's potential stakers, it must be overwhelming. The discovery problem.
Huge discovery problem. With over 100 options, how do you even begin to find the quality projects, the diamonds in the rough? It's tough.
Are there mechanisms being put in place to manage this sprawl?
Yeah, the network is trying. There's talk of implementing a hard slot cap, maybe initially around 128 subnets, and there's a deregistration process being implemented based on emissions performance. If a subnet consistently fails to attract enough stake to earn meaningful emissions, it eventually gets kicked off the active set.
Okay, so amidst all this chaos, some subnets have genuinely broken out, right? captured significant market attention, attracted real stakes since April. Who are the standouts?
Chutes, subnet-64. That's widely seen as the first major breakout star of the post-dTAO era.
What does Chutes do?
It offers serverless AI compute, specifically focused on deploying popular models like DeepSeek and Mistral easily. And they have a killer value proposition.
It is.
They claim to be up to 85% cheaper than doing the same thing on AWS.
Wow, that's
Yeah.
a very clear pitch.
Incredibly powerful and easy to grasp. That's why it cut through the noise. It was the first subnet to blast past a $100 million market cap for its alpha token. And it did that just 9 weeks after DTAO launched. Its success is really attributed to that clear value prop and, importantly, delivering a functional service that met a real need.
Any other big breakout stars?
Gradient's Subnet 56 is another one getting a lot of attention. Their focus is on democratizing AI model training, trying to lower the barrier for developers. They saw just a meteoric rise in their alpha token price post-dTAO. One report said over 550% in a single month. That signals huge market appetite for more accessible AI development tools. And there's a lot of community optimism around their team's reputation.
And what about Targon Subnet 4? That one comes up a lot too.
Yeah, Targon is interesting. It's developed by Manifold Labs, led by Robert Myers, and we'll talk more about him later. Their focus is more foundational. They're building decentralized infrastructure for what they call an AI digital commodities market, things like enhancing AI's ability to understand context and relationships between data.
So less of an immediate application, more core infrastructure.
Exactly. It's considered really technically robust and strategically important for the network's long-term vision, even if its price action hasn't been quite as explosive as Chutes or Gradient's. It's highly respected for its technical depth.
And looking beyond those top few, there seems to be real diversity emerging across the subnets.
Oh, absolutely. You've got Apex, Subnet 1 focused on conversational AI agents, Omron, Subnet 2 doing really cutting-edge ZKML.
ZKML, zero-knowledge machine learning.
Yep, proving AI computations were done correctly without revealing the underlying data. Very advanced stuff from Inference Labs. Then you have protein folding, Subnet 25, in the DESI decentralized science space. It's AI, Subnet 32, working on deepfake detection. Even TAO hash, Subnet 14, aiming to decentralize Bitcoin hash rate distribution using Bittensor's incentive mechanism.
Looking at the data, like the CoinGecko tables, really illustrates that breadth. You see these different market caps, different functions listed for Chutes, Templar, TAO hash, Targon, Celium, gradients. It's a whole ecosystem sprouting.
It really is. And behind these successful subnets, you have key development teams emerging. The architects, you could call them, who are really shaping these new layers of the network.
And one name seems to come up again and again, Rayon Labs.
Undisputed powerhouse, arguably, founded by Namare and Bon Oliver. They're the team behind multiple top-performing subnets. Chutes, SN64, Gradients, SN56, 19, SN19.
Wow, multiple hits.
Yeah, their ability to consistently ship several high-quality, successful products in this environment has earned them a stellar reputation. And get this, their subnets, combined, reportedly account for over a quarter of all TAO emissions being distributed across the entire network.
A quarter. That gives them immense influence.
Immense, both economically and strategically.
And Manifold Labs with Targon SN4.
Led by Robert Myers. His background is fascinating. Former Bittensor core team employee, early miner in the network's history. That deep historical understanding of the protocol really informs their work on Targon and earns them a lot of respect.
Other key teams.
Macrocosmos, running Apex, SN1. They seem focused on building out a full AI pipeline, including fine-tuning. They come across as serious long-term builders. And Inference Labs, the team behind Omron, SN2, are highly regarded for their deep technical chops, especially in specialized forward-looking areas like ZKML.
So, analyzing these dynamics, it seems like we're seeing subnet power blocks forming.
I think that's exactly what's happening. Elite teams, particularly Rayon Labs, aren't just launching one successful subnet. They're building a portfolio of successful, potentially interconnected ones.
And success breeds success.
Right. The success, emissions, and reputation from one project helps fund, bootstrap, and market the next one. It creates this compounding effect, allowing them to capture a really disproportionate share of the network's rewards and influence. It's a direct, maybe unavoidable, second-order effect of the hyper-competitive market that DTAO created.
And you touched on this earlier, it's not just about having the best tech anymore. Narrative is critical.
It's arguably equally important, maybe even more important for getting that initial traction in such a crowded field.
Why?
Because clear, compelling, and crucially, understandable narratives are what cut through the noise and attract that initial wave of stake. Chutes cheaper than AWS Hook. Perfect example. Simple, powerful, addresses a known pain point.
And a strong narrative starts a feedback loop.
Exactly. Good narrative attracts attention, gets picked up by influencers, brings in retail capital stake. People stake. TAO drives up the alpha price. That higher price allocates more TAO emissions. Data platforms like TestStats and Kaido AI broadcast that success tracks validates the narrative, attracts even more capital. Boom.
So the market isn't just judging technical merit, it's also a market for attention and stories.
Absolutely. The most successful teams aren't just brilliant developers, they're also savvy marketers and effective capital attractors. We saw that comment on Reddit you mentioned earlier, the builder lamenting they had a great algorithm but couldn't market it. That really nails the reality now. You need both tech and narrative.
Which brings us, I think, quite neatly to the capital allocators themselves. The investors, the financial backers, there's this core tension here, isn't there? Bittensor's whole fair launch ethos.
Yeah, no pre-mine, no specific VC allocation set aside. That 21 million token cap inspired by Bitcoin.
Versus the reality on the ground, which is a growing and significant presence of institutional capital and concentration.
It's the fundamental tension woven right through the network's fabric. The rules were designed for a fair launch, aiming for decentralization. But the reality, especially post-dTAO, where capital equals power, is one of pretty significant concentration.
How concentrated?
Well, on-chain analysis consistently shows this. Reports suggest the single largest wallet holds something like 20% of the total TAO supply, and the top 10 validator nodes control over 65% of all of the delegated stake in the network.
Wow. So the rules of the game might be fair, but the power on the field, which is now largely a function of how much capital you have, is highly unequal.
Precisely. And that inequality has largely been driven by some very early, very aggressive accumulation by institutional players who saw the potential long before dTAO and were able to deploy significant capital to build positions. And those players are now, unsurprisingly, some of the most influential forces shaping the network's direction.
Digital Currency Group, DCG, really stands out here. Their involvement seems incredibly deep, strategic, multi-layered.
They are arguably the single most influential institutional entity in the ecosystem. Reports suggest they might be the largest institutional holder, maybe around 500,000 TAO, which is like 2.4% of the total supply.
And their influence goes way beyond just holding tokens.
Oh yeah, it's exerted through Yuma, their dedicated Bittensor subsidiary run by Barry Silbert. Yuma acts as this integrated platform. They invest, they build, they incubate projects. They run one of the largest, most influential validator nodes, capturing significant emissions flow.
And critically, they've been key in building those bridges for traditional finance.
Absolutely. Launching the Grayscale Bittensor Trust back in April 2025. And that BitGo partnership in June for institutional staking. They are very deliberately positioning themselves as the primary regulated on-ramp for large traditional capital wanting exposure to Bittensor.
Then you have Polychain Capital and DAO 5, the early, high-conviction crypto VCs.
Exactly. They made massive bets on TAO early on. Their positions are now reportedly worth hundreds of millions. And like DCG Yuma, they aren't passive. They are active infrastructure players, both running their own substantial validator nodes. They have operational skin in the game.
Tikin Salimi from DAO 5 has been particularly vocal, hasn't he?
Yeah, a strong public advocate frames their involvement as a deep, long-term, high-conviction bet on the fundamental value proposition.
Beyond these giants, are we seeing other types of funds emerge? Funds specifically focused on Bittensor?
Yes, definitely. A whole class of specialized funds is cropping up, focused almost exclusively on navigating this complex ecosystem. Well, there's DSV Fund. Their strategy seems pretty sophisticated, multi-pronged. They hold a core TAO position, sure, but they're also actively trading these subnet alpha tokens, what they call a liquid venture layer, and they're forming strategic partnerships with select development teams. Their public analyses acknowledge the risks, emission pressure, centralization concerns, but frame TAO as this big asymmetric opportunity.
Interesting. Anyone else?
DNA Fund has a different angle. They're focused more on the supply side, the miners. They've reportedly committed around $50 million just in compute hardware for mining operations. They see Bittensor as a platform where teams can launch businesses without needing traditional VC funding, powered by this decentralized compute network they're helping build, supporting growth from the ground up.
And unsupervised capital. They have ties to a co-founder, right?
Yeah, anchored by Crucible Labs, which was co-founded by Ala Shabana, one of Bittensor's original co-founders. Unsupervised runs a dedicated liquid fund. Their strategy seems to be actively managing a portfolio of alpha tokens, trying to accumulate more TAO, by identifying potentially mispriced tokens or backing promising but maybe overlooked teams.
So funds like OSS Capital, Skycatcher, the Hypera are also in this mix.
Yep, they're part of this emerging landscape of funds bringing increasingly sophisticated capital allocation strategies specifically tailored to Bittensor's unique mechanics.
These mechanics, particularly the DTAO staking into AMMs, seem to have created something you've called a shadow VC model. Can you explain that?
Yeah, it's fascinating. The DTAO mechanics, the public AMMs, the market-driven emissions, have basically enabled a novel form of on-chain venture capital. It's happening in public, potentially in real time, driven by market signals.
How does it work in practice?
A large fund, or even a savvy individual whale, can effectively invest in a promising subnet. They do this by publicly staking a large chunk of TAO into that subnet's AMM.
What does that achieve?
Several things simultaneously. It provides crucial initial liquidity for the alpha token. It acts as a powerful public signal of demand and confidence. It directly boosts the alpha token's price in the AMM. And critically, that higher price allocates more TAO emissions to the subnet.
Which acts like operational funding for the development team.
Exactly. The emissions become their working capital. And in return for providing this initial stake and market signal, the investor, the large staker, receives liquid alpha tokens from the AMM, plus ongoing staking rewards from the emissions.
It's all transparent on the blockchain.
Yep. And potentially much more liquid than traditional VC equity, since the alpha tokens are tradable almost immediately.
But like any powerful financial tool, there's a potential dark side, right?
Absolutely. While this mechanism can be used to fund genuine innovation, it can also be used speculatively. Well, a large initial staker could, theoretically, use their stake, combined with narrative and marketing, to intentionally pump an alpha token's price. This attracts retail stakers chasing the momentum. Then the initial large staker could potentially exit their position, selling their alpha tokens or redeem TAO into the market demand they helped manufacture.
So using the system for a pump and dump type scenario.
That possibility is a significant concern raised by critics. It highlights the potential for manipulation within this very open, market-driven system.
Which brings us back to that central paradox. It's really striking.
It is. The presence of major sophisticated institutions like DCG, Polychain DAO 5, it's undeniably a powerful validation signal for Bittensor. It brings credibility, serious capital, and infrastructure that might be absolutely necessary for the network to compete with the Web2 AI giants like Google or OpenAI. That's a huge bull signal.
VTT.
But that very same institutional presence and the immense leverage their capital gives them within the DTAO market model is simultaneously seen as the single greatest threat to the network's original decentralization ethos.
So the future is really defined by this tension.
I think so. It's the core conflict that will likely shape Bittensor's path forward. Balancing the undeniable need for institutional scale and capital to achieve its grand vision against that foundational commitment to genuinely decentralized ownership and control. It's a tightrope walk.
Okay, last major piece here, the flow of information. The voices shaping perception in this really complex environment. It feels like there are almost two separate conversations happening at the same time.
There absolutely is. It's a clearly bifurcated discourse. You've got the top-down narrative, which is largely driven by the institutions, the major builders, the big validators, mostly playing out on platforms like X, formerly Twitter. And their pronouncements are watched like hawks because they can directly move markets, influence perception, and steer capital flows.
Barry Silbert, for example, DCG founder, Yuma CEO. His tweets about Bittensor are treated as major signals of institutional intent, right? They can impact price and legitimacy.
Definitely. Then you have figures like Daniel Chung from Syncrecy Capital. He's good at articulating that high-level investment thesis, framing the project for other sophisticated investors. He's the one who called Bittensor the incentive backbone for the agentic economy, positioning it as fundamental infrastructure for the future of AI agents. Help shape that grand narrative.
You also hear from analysts and core builders themselves, adding their perspectives.
Yeah, Tekin Salimi from DAO 5 offers that institutional perspective, but often with nuance about risks and opportunities. Robert Myers from Manifold Labs is unique former core team, early miner, now a successful subnet builder CEO. His views carry a lot of weight because he blends history, deep protocol knowledge, and practical building experience. Mitch Boom from Tofu gives insights from the subnet launchpad angle, how DTAO actually changed the dynamics for getting new projects off the ground.
And data is becoming a bigger voice too, like Kaido AI.
Hugely important. Kaido AI provides more objective data analytics. They track things like mind share, how much conversation is happening around certain AI concepts or specific subnets. They highlight trending projects based on data, not just hype. That influences perception in a different way. Taibot, often linked with the Taoshi subnet, is another key source for regular updates, analysis, performance rankings, all based on network data.
So that's the top-down view. What about the other conversation, the bottom-up?
That happens in the digital town squares, the community forums where the messy, practical realities get debated day in, day out. The Bittensor subreddit is absolutely ground zero for this. It's the primary hub for raw, unfiltered community sentiment. If you want to understand the ground-level experience, you have to read the subreddit.
What kind of stuff gets discussed there?
Everything. Technical Q&A, people reporting bugs, intense debates about staking, which validators really give the best net returns after fees and downtime, different strategies for staking alpha tokens versus root, and crucially, you find candid, sometimes really pointed criticisms of the project itself.
That's where you find that disconnect sometimes between the polished narrative and the user experience.
Exactly. Like that example you mentioned earlier, the university student praising an AI model's quality on one subnet, but absolutely slamming the difficulty of the developer docs and the lack of basic support for newcomers trying to build something simple. That contrast between the high-level institutional dream and the practical implementation challenges faced by independent builders or regular users, that comes through loud and clear on Reddit.
It provides that essential, sometimes uncomfortable counterpoint to the hype.
Totally. The official Discord and Telegram channels are also important, of course. They're the primary places for real-time updates directly from the OpenTensor core team and the individual subnet projects. Essential for the latest technical news, deployment announcements, getting support. But naturally, the discourse there is more moderated compared to Reddit.
This split information landscape, it feels somewhat intentional, maybe, linked to the OpenTensor Foundation's general approach.
I think it is, partly. The OTF has largely adopted that Bitcoin-like ethos, right? Focus intensely on the core tech, the fundamentals. Actively avoid aggressive paid influencer marketing or traditional PR campaigns.
What's the effect of that?
Well, on the plus side, it enhances their reputation for technical seriousness. It attracts a certain type of community member and investor who value substance over hype. But the consequence, the downside, is that Bittensor tends to fly under the radar for the broader crypto market compared to projects with huge marketing budgets. And it definitely creates a steeper learning curve for newcomers trying to get involved beyond just buying the TAO token on an exchange.
So they rely more on organic growth and data.
Yeah, they rely heavily on organic word of mouth, the project's own merits, data-driven analysis from platforms like Kaito AI or Tailstats, and the commentary coming from credible institutions and builders to get the message out, which absolutely reinforces that two-tiered information environment we talked about. You really have to actively seek out both the high-level strategic vision and the ground-level practical reality to build a complete nuanced picture of what's going on.
Okay, let's try and bring all these threads together now. It's clear Bittensor post-dTAO is, well, incredibly complex, dynamic, full of contradictions.
Definitely. It's a network defined by these inherent tensions, decentralized ideals versus the centralizing force of capital, huge technological promise versus messy implementation challenges. Understanding it really requires synthesizing the roles and relationships of all these key players we've discussed.
And the most powerful dynamic seems to be that investor-validator subnet nexus.
I think so. Those vertically integrated blocks, with DCG Yuma as the prime example, you see institutional capital flowing through their validator node, being staked directly into subnets they've incubated or partnered with. This provides the crucial initial emissions boost and market signal for those subnets.
Creating a self-contained engine.
Exactly. The fund gets liquid alpha tokens or TAO rewards. The validator earns commissions and emissions. The subnet gets funded and bootstrapped. The investor influences outcomes at every single level. It's a powerful engine driving professionalization and scale, no doubt, but it's also the primary source of that persistent centralization risk.
And then there's that secondary flywheel, the influencer community capital one.
Yeah, secondary but still potent. Narrative starting on X, maybe an institutional endorsement, maybe a data highlight from Kaito AI, filtered down, influence community discussions on Reddit or Discord, which drives retail staking decisions. That on-chain activity then gets broadcast by data platforms like Tailstats, which further validates the original narrative, attracting more capital. Community sentiment, shaped by all these different voices and data points, can definitely move these relatively thin alpha token markets.
Looking at the network's overall reputation, you really see that profound duality you mentioned.
You really do. On one side, there's immense technical credibility. The sheer ambition of building a decentralized market for AI is huge. It attracts top-tier technical talent. You see that with teams like Rayon Labs. It attracts sophisticated long-term investors like DCG, Polychain, DAO5. The fact that they successfully launched DTAO, a massive technical undertaking, and saw this explosion of subnet innovation that demonstrates real execution capability.
But then there's the flip side, the credible criticism.
Equally valid points. The potential for the DTAO economic model to favor extraction over creation, as argued by sharp analysts, the undeniable concentration of capital that seems to contradict the decentralization ethos, and the very real practical challenges and barriers faced by independent developers highlighted in community feedback, which could threaten the ecosystem's long-term health and diversity if not addressed.
Which brings us, I suppose, to the million-dollar question, the critical factor for the network's future, the thing that will decide if the bulls or the bears are right in the long run.
And that is, can Bittensor's subnets achieve genuine product-market fit? Can they build sustainable off-chain revenue streams?
Meaning, can they actually become successful businesses in their own right, where real users outside the crypto bubble pay for their AI services with actual dollars or maybe stablecoins, rather than just relying on being subsidized by the TAO emissions captured through the DTAO staking game?
Precisely that. If a critical mass of subnets can make that leap become profitable businesses serving real-world needs, it validates the entire economic model.
Sure.
It proves the flywheel isn't just theoretical. It bolsters the bull case significantly.
And if they can't, if most remain reliant on emission farming,
Then the risk increases dramatically that Bittensor becomes primarily a closed-loop system, a sophisticated game of attracting stake to capture emissions, where value capture dominates over genuine value creation, and that would largely validate the critics' arguments.
So for you, the listener, trying to engage with this incredibly dynamic landscape, whether you're thinking about staking some TAO, maybe even dreaming of building a subnet, or perhaps just watching with intense curiosity, navigating it really demands a strategic mindset.
Absolutely. If you're approaching this as an investor or a potential staker, you simply must use a dual analysis framework now. When you're picking a validator, look way beyond just the advertised APY. Dig into the quantitative data from TAO stats or similar tools. What's their actual V-Trust score? How do their historical dividends look relative to their total stake?
Consider their business model, too.
For sure. What's their commission, their take? Are they competing on price? What's their strategic position? Are they just a pure validator? Or are they part of a larger platform or ecosystem like Yuma? And importantly, what's their reputation within the community for transparency, reliability, and engagement? Blend all of that.
And for selecting specific subnets to potentially stake into, it's not just about the tech or the hype.
No, it's both. You absolutely need to assess the fundamentals. Who is the team behind it? What's their track record? What is the actual value proposition? Does this subnet solve a real problem in a compelling way? But then you also have to evaluate their narrative strength. How well are they communicating their value and their market momentum? What's the market cap of their alpha token? How liquid is it? What share of network emissions are they actually capturing right now? Both the fundamental analysis and understanding the market dynamics are crucial in the DTAO world.
And aligning your risk tolerance seems key. Root versus alpha staking.
Critical. Staking on the root subnet, subnet 0, is clearly the more conservative index-like approach. Lower potential upside, maybe, but much broader exposure, less dependent on any single project failing. Staking directly into individual subnet alpha AMMs is the aggressive play. High potential alpha, but much higher risk. You're making concentrated bets.
And be aware of more complex strategies emerging, too.
Yeah, watch out for things like protected alpha strategies, like those being explored by groups like Mentat Mines, which might aim to reinvest only the yield generated, not the principal. The landscape is constantly evolving.
Now, what about for potential builders, someone listening who thinks they have a great idea for a subnet?
My advice: understand that the bar is incredibly high now. You don't just need a solid technical product. You also need a crystal clear, compelling narrative that can cut through the noise. And you need a smart strategy for attracting that crucial initial wave of stake to get your AMM bootstrapped and start earning emissions.
Just building it and hoping they will come probably won't work.
Very unlikely in this crowded, competitive market. Forming strategic alliances with established players, maybe an incubator like Yuma, or collaborating with a powerhouse team like Rayon Labs, or being exceptionally good building a passionate grassroots community around your project. These are becoming almost prerequisites for success now.
And finally, for potential strategic partners, maybe companies looking to integrate AI services.
Engage the power blocks. Look at the major institutional players like DCG Yuma, the dominant development teams like Rayon Labs. They control significant resources and influence. But most crucially, look for opportunities to provide real-world utility and monetization pathways for the most promising subnets. Help them bridge the gap to that sustainable, off-chain revenue. Integrate their AI services into your products or platforms. Find ways for users to pay with fiat or stablecoins. That's how you genuinely support long-term value creation and strengthen the positive side of the flywheel for the whole ecosystem.
So there you have it. We've gone pretty deep into Bittensor's complex, often contradictory post-dTAO world. We've traced how that fundamental technical change really did transform the network, shifting it from a primarily political game to a heavily financial one. We've met the key players, from those institutional heavyweights deploying massive capital down to the community builders grinding away on documentation and code.
We've explored that innovative yet chaotic landscape of competing subnets, each vying for stake and emissions in the open market.
And we've really grappled with that central inherent tension, the constant push and pull between Bittensor's decentralized ideals and the undeniable gravitational force of concentrated capital.
It leaves the network at a truly critical juncture, doesn't it? All these powerful, often conflicting forces are actively vying for influence, battling to shape its ultimate destiny.
And that central conflict remains unresolved. It's the question that will likely define everything moving forward. Can the market mechanics unleashed by DTAO genuinely foster widespread value creation? Can they lead to a thriving ecosystem of sustainable, profitable subnets solving real-world AI problems?
Or will the system primarily serve as a sophisticated mechanism for extracting value, disproportionately benefiting those who entered early, have the most capital, and possess the sharpest market game?
It's a fascinating experiment to watch unfold.
So, as you, our listener, continue to navigate this dynamic landscape, whether you decide to become a staker, maybe even take the plunge as a builder, or perhaps just remain a curious observer watching this grand experiment play out, maybe take a moment to consider which force you believe is most likely to ultimately shape Bittensor's trajectory. Is it the raw, innovative power bubbling up from its subnet builders? Is it the strategic, often centralizing influence of institutional capital? Or is it perhaps the collective wisdom and sometimes the bracing skepticism of its decentralized community?
And what does your answer imply about where you might focus your own attention, or maybe even your resources, within this ecosystem? Something to think about.
Thank you for joining us on the Deep Dive.